And welcome out to our halftime report here, 11/20/2018. Producer Cody, Coach Matt, Coach Tim, getting ready for Thanksgiving. A lot of volatility in the market. Matt, clearly one of your favorite candidates here. Matt, first off, how are you doing this morning?
Anytime the market's going down, I'm doing much better than the market.
I'm going to quiz you real quick.
Especially when you've been slightly bearish.
I've got it. I've got a challenge for you. You ready?
Yeah, I'm ready.
Where is our halftime report streamed? Do you know?
Where's it streamed?
Yeah.
At the Tackle website.
Okay, you get there. That's one. There's three.
LinkedIn.
Boom. And we are on YouTube, Matt. So there's
that doesn't count.
That's all.
We're on YouTube. There's a trick question there.
I was on LinkedIn. The reason I bring it up, I was on LinkedIn this morning, and we had quite a few comments from people who watch it on LinkedIn, which I thought was really cool. As a matter of fact, we're getting a lot of traction there, and then a lot of people actually watch it on the website at the Trade Center. So I know I love our halftime crew. Come here and join us in YouTube. That's a way that you can post a comment and whatnot. But no matter when you watch it or where you watch it, whether you watch it after work at night, it's always great to be here and to be going through the markets with you guys. Let's start with the S&P here, Matt. Market opened down. Now we're coming back up. What's your read here technically?
Technically, you broke through intraday support at 2,700 yesterday. You had bearish momentum coming into it, and then you had some follow through today. And the simple reality, Tim, is headlines. Headlines are bad. Sentiment is bad right now in the market, and when you couple that with negative headlines, you see price opens like you did today, where you get massive selling volume coming into the open. I mean, Tim, yesterday Target in the retail sector just got absolutely slammed with a couple of concerns, specifically with Target. They missed on earnings, number one. But with the retail sector in general, all of that is concerned about slowing growth. And you can throw a dart at the reason, right? You can throw a dart at the headline, whatever you want to give it. But negative reaction to earnings, coupled with negative reaction to growth concerns, coupled with another report coming out of Boeing that they canceled the call that was scheduled with the airline from the disaster from a few weeks ago with the plane crash. And then you had another price downgrade on Apple. And so when you have all these things come in an environment where you already have a bearish sentiment and a fear-based sentiment, you're going to see price depreciation fairly quickly, and that's what we saw at the open.
Yeah, I agree with that. I mean, the reality is we have seen prices dropping for quite some time. We've been talking about bearish action. What you do about it as a trader is your job, right? I mean, if you're going to play this game, if you're going to be in the business of trading and investing, you're not going to be right every day and you're not going to make profit every day. There's no way to do that. But what you can do is you can react and do the best with what you have in front of you. That's the only options you have, quite frankly, no pun intended. Apple's down here today. They are trying to come back a little bit. That Boeing news is very troubling for that stock and obviously breaking down. We talked about that one a little bit. The S&P from a relative standpoint is down 1.33%. NASDAQ's now back down only 1.1%. It was down close to 2 earlier this morning. The Dow's down big on some of those big names. Obviously, the S&P has more broad balance. When you're looking at the market, first index you always think about is the S&P 500. 2,600 is my line in the sand, but I don't really know where support is down here, Matt. Very basic concept, support and resistance. Where would you draw that down here on the bottom?
Those zones are so big right now, Tim. Yeah. I mean, and we've talked about this in the past where, we were talking about the zone of support and you say that zone of support is 2,600, Tim, and I'm not going to disagree with you. It was old support over here. It kissed it on the initial bearish sell-off that we had in October coming in. I believe that was October 29th. So 2,600 is certainly going to be a support zone, Tim. But if you recall about a month ago when I talked about as the ATR, the average true range, is expanding, well, those zones of support and resistance have to expand as well. So with the ATR currently being 51, Tim, you're talking about a support zone that is about 50 points. That's a 3% support zone, Tim. And so when you're talking about that, you're looking at anywhere from 2,600 to 2,575 all the way up to 2,625. So you have a massive area of support. The sentiment, though, is bearish, and the market's not going to give. If you have negative headlines coming into a negative reaction in the market, the market's not going to care about support in this environment, Tim. It's not. It's going to break support. So wherever you put that support channel at, you got to give it a number, and I think 2,600 is the number you got to give it. That's number one. Number two, when you deal with days like today, it is always important to break down that intraday market to kind of get those intraday support and resistance channels. So from an intraday perspective, you have a support channel right here. And this is something that you need to track throughout the rest of the day if you're going to see any price appreciation. And this is important if you're looking at a potential bullish trade in the market, Tim. So if you got a list of 3 or 4 bullish trades and you're waiting, is it confirming? Is it not confirming? What should I do? What should I wait for? I don't want to buy as the market's going down. Well, look at this really horrible drawn support channel here, but look at this channel here. If you break back up above that channel at 2673, that's a potential buying opportunity in those bullish stocks that you have been looking for. So for example, a couple stocks that I'm looking at. Yesterday we talked about this, but he had something funny to say today in the halftime prep show. But when you're looking at Applied Materials, for example, okay, Applied Materials, and we talked about this stock yesterday, it's got a wonderful bullish engulfing candlestick. It's attempting to break out right now, but we're sitting in a moment where it's like, is it confirming? Is it not confirming? Well, we're not going to know that until the end of the day. But it's in that zone where it could confirm a trade and it could come right back down underneath that 36 handle. Well, what I'm looking at is not only on Applied Materials here, Tim. If you're looking at those intraday resistance channels on the S&P 500 and you're waiting to see if we're going to start dropping back down or whatnot, well, if it breaks out of that channel, yeah, that'll give a lot of credence to a trade on something like Applied Materials or another one, ADI. Okay, looking at ADI here, let me take it off there. Looking at ADI here, Tim, you have a clear high base type situation with a potential breakout of $90. Mm-hmm. So here, and on a positive reaction to earnings as well, I believe. Let me make sure that is not earnings today. On the 20th before, so it came out this. Today's the 20th, right?
Mm-hmm. Yep.
So it came out this morning. So if you're looking at this as a potential breakout of $90, and you're like, okay, it's getting close to that. Well, understanding the market and how the market kind of responds from an intraday perspective can help you make those decisions to get into certain trades. And the exact same thing can be said on the downside, Tim. If you're looking for potential bearish trades here today, and you're saying, okay, I might have missed that initial response at the market open. Well, you got a lot of opportunity as that market has came back up into that resistance channel. And if it shows weakness at this resistance channel, and we start to see price depreciation coming in to the last hour or 2 hours of the trading day, you can go pull some triggers on bearish trades. So it's important to understand the mid-market routine here, because it's going to help you make decisions whether or not you're going to enter into some bullish trades upon confirmation of the market getting back up above those intraday resistance channels, or perhaps some on the bear side.
Saw a funny couple of headlines on one stock I track. NVIDIA have been in the news recently with their earnings and the drop and the Bitcoin volatility. 3 hours ago, NVIDIA falls 4%. 2 hours ago, NVIDIA rises 3%. Kind of describes the entire market.
It's bear market. That's what happens in bear markets, Tim. Price gets cut by 8%, up the next day by 6%. Everybody rushed in to buy. Oh my God, price down another 12%. That's volatility. That's bear markets.
Yeah, definitely the volatility sky high. A lot of NVIDIA, and we usually bring up Bitcoin later, Matt, but I think we got to bring it up right now. It had been so boring for so long. NVIDIA's volatility is directly tied to what's going on with Bitcoin. Bitcoin now down after it broke below that 6,000 mark. I saw a funny thing on Twitter by Coach Randall over at Tackle Trading about how, what did he say? Oh, Thanksgiving is going to be awkward this year for a lot of millennials who convinced their grandparents to buy Bitcoin.
Like I said yesterday, all they're going to be doing is like, no. Don't worry about that loss of 75% from last Thanksgiving. I got the new one. Let's go buy all the weed stocks. Let's go get all those weed stocks. I mean, just wait until the U.S. makes it legal. So this industry will be a $90 billion industry. And it's like, okay, all right, let's go do that. You got to love investment advice.
Cryptos are obviously bearish right now. They're in a bear market. They've been in a bear market for all of 2018. And breaking down here.
Cryptos have zero ability in it. And what I mean by that, they have the ability to go to the price of zero.
Oh, no. Okay.
That's what I meant by
All
that.
right. All right. All right.
Yeah.
Listen, I mean,
I saw the, hmm.
I didn't know where you were going with that.
I was waiting for the, well, say la vie, Matt.
Even pot coin? You're not
You know,
going to be
Potcoin.
dumping money into pot coin? All right.
I'm not buying, Potcoin or any of the other coins. You never want to get to the point where you're like, hey, I told you so type situations. But I just don't. I just don't understand. I just don't understand. I don't understand why anybody would be holding Bitcoin right now.
That was a politician's way of saying "I told you so." I'm not going to sit here and say "I told you so" when I've been telling you Bitcoin's bad for years.
Well, it's got massive risk in it right now, and holders beware. That's all I'll say.
Even a broken clock's right twice a day, right, Matt?
Are you saying I'm the broken clock?
I'm just saying. I mean, the "I told you so" on cryptos has been coming for a long time. I'm going to hold it off for a podcast, and I'll eat crow. There's no doubt about it. I will eat crow. Obviously, down right here.
For those of you who don't understand the inside of what was just going on, it was Tim's prediction in our podcast at the first of the year that what was Bitcoin's price going to be?
I think moving on.
Politician back from the other justice now.
But honestly speaking, though, we do these radical predictions every year in the podcast, and we all pick something that is so crazy and unprecedented. And like one time, Tim, one of my predictions was Greece is going to leave the Eurozone, right? So yeah, it's just crazy predictions, and we like to have fun. But no, Tim, in all seriousness, though, this has tremendous risk in it. It's broken key technical levels. And I get that there's a fork. There's always a fork. There's always another fork, and there's always another fork. But it has tremendous risk in it right now.
Yeah, I would agree with that. Obviously, they are down. In fact, from that breakdown at 6,000 level, I mean, it dropped all the way to 4,200 in about 4 or 5 days. So you can see the volatility.
And if you'll remember, for those of you who do trade Bitcoin, remember these types of moments back here in early 18 when we saw price depreciation very rapidly, very quickly. Don't get fooled by the snapback rallies. That's what my recommendation. Don't get fooled by the snapback rallies because they're going to happen. But remember what I said about oil, Tim, over the course of the last 3, 4, 5 days in the halftime report. Every buying option, every buying activity will be met with swift selling, aggressive selling.
Mm-hmm. Yeah, I would agree with that. A couple of the losers here today, L Brands, Jacob Engineering. I think you got to start with Target, though. Target, to me, is one of the stories of the day. There's no doubt about it. TGT, we're going into holiday season, Matt, and they missed earnings. They're down 10%. Company we both like very, very much.
That Santa isn't coming to town now. I mean, can we put that? Can we just get over? Can we be done with it?
Listen, we're still before Thanksgiving. I have a rule in my life that I don't think about Christmas till after Thanksgiving. So I will make that determination next week.
Well, market starts thinking about Christmas in June.
I get it. That's where the Santa Claus rally
so does Walmart
starts to build. Yeah. Target missed here, Matt. That's not good for retail, obviously. What happened? And how do you read this chart? Do you think what kind of gap is this? We had that discussion a few weeks ago about gaps.
We don't know yet. Let's wait to see the market respond over the next day or so on this one. But if you're looking at the type of gap that would be technically either an exhaustion gap or a runaway gap, and we just simply don't know yet. A lot of times you're waiting for after the initial response overnight, you're waiting to see how the market responds. And right now the market has responded very mixed on Target since the cash opened at 9:30 a.m. Eastern Standard Time. So in terms of that, obviously the overnight sell was sold aggressively. And there's a couple concerns. Number one, they missed on earnings per share. Okay, so that's number one. They missed on earnings per share. But again, the biggest issue right now is not the misses on earnings per share or the increases on revenue. The biggest issues, and the market always trades for the future, and this is something that a lot of new traders and people who are not familiar with the market just simply don't understand. The market doesn't trade for what's happening right this very second, Tim. The market doesn't even trade for what's happened over the last year, 2, 5, 10 years. The market always trades for a future expectation. And if the market expects the economy to regress in 2019, it's the same way that if a stock expects to have slowing growth in 2019, the market is going to price that into the market by selling it down to a price level that they are comfortable owning it. And that's what the concern was with Target on their earnings report, was that they were slowing growth from 2019 in comparison to 2018, even though 2018 has been a good economic year, a good fundamental year from an earnings perspective, a revenue perspective. Again, you got to look at the future, and obviously investors are concerned about the future with Target.
Yeah, let's move on to the Dow. Give me the actual index first, and then we're going to go through some of the major components here today. All 30 companies on the Dow are in the red today. That's not very common. No. Usually you'll get at least something going up, but you have 30 declining issues and 0 advancing issues, Matt. The YM contract, it was holding up better than we had seen before, but now we're actually down on some of the weaknesses of that news. Apple Computer, Goldman Sachs, Caterpillar, Walgreens, Chevron, all down more than 2.5%. In fact, Apple down 3.3%. It's going to be a NASDAQ and a Dow discussion here with Apple.
And we talked about Apple when it broke that 200 level, when it broke the 200-day moving average, when it broke 190. We talked about the projection was down to 180. Currently, it's at 179. For me, if you're in any type of trade here, Tim, for me, I think you got to look at this as a gift to the trading gods. It hit your target, it hit it rapidly. I think you lock in profit and you wait to see Apple responds over the next week before you enter into a new trade.
Where's the bottom on Apple here? I mean, it's impossible.
Are we talking bottom short term? Are we talking bottom over if we go through a massive recession?
Well, let's think about it. If you do go through a recession, what has Apple done during the last 2 recessions percentage-wise? Because people always, here's a mistake that I've seen many, many times as we move into bear markets. People always think, well, this stock is different. This time is different. This company's a good company. You hear those catchphrases over and over and over again. And that same mistake investors have made for the since the dawn of time, by the way. Obviously, there's risk as we are looking at Apple here.
Listen, I get it. And you know what? Also a mistake investors make, Tim, is they say, well, Apple's a different company now than it was in 2008, right? We hear that a lot too. Or we hear it with Amazon. Even more than Apple, we hear it with Amazon. Oh, but Amazon's just a different company today than they were in 2008. And all of that is true, but those things have been said since the dawn of time. And yet cycles repeat themselves. To answer your question, Apple went down 80% in the dot-com bubble, and Apple in 07, 08 went down by about 70%. So we're talking 70 to 80%. And a concern with Apple is 2 things right now, Tim. Number one, Goldman Sachs dropped their price as well. And Dustin makes a really good point on Apple. Halftime crew, Dustin. I feel like Apple is going to get killed with 1,200 iPhones. There was a report today, and I can't remember what institution put it out, that Apple had lost its pricing power, right? And what you've seen on Apple is you go from $600 iPhones to $700 iPhones to $800 iPhones to $1,000 iPhone to a $1,200 iPhone. And at some point, they do price themselves out of the market. And what happens when a company, and it does even happen with companies like Apple, what happens when you lose your pricing structure as a corporation, Tim, what your consumers do is they go look for a cheaper product that they can get the same type of value out of, is what they do. And so they lose market share to competitors is what happens. And that's the concern with Apple. I never agreed with Apple when they came out with $1,000 phone and a $1,200 phone. You're pricing that in above even far above even personal computers today. It's just, I felt like they were too rapidly increasing their price. When you're thinking about what we pay for an iPhone just 2 years ago, Tim. The iPhone 8, what was it, $800?
$800, I think, okay. And I even made fun of it then. Yeah,
we made fun of it then, but now you're talking about $1,000 to a $1,200 phone. You're talking about a 20 to 33% increase in cost in a 2-year time period where wages have flatlined in that. That doesn't make sense for me, especially if you're Apple and you're Tim Cook and you're saying, well, we're going to increase because we're Apple and people will buy our brand simply because we're Apple and they love the logo of Apple and the consumers of Apple are crazy and they'll support us forever and ever and ever. Well, that's not necessarily true when consumers are debt driven at the highest levels they've been in 10 years, when consumers' wages have not went up as was expected given the massive tax increase or tax decrease at the corporate level in 2017. So Apple's got some concerns. I'm concerned about the fundamental nature of that decision.
I've got a confession. I've not bought a new phone in probably 10 or 12 years because I always get hand-me-downs from my father-in-law who has so many connections in the cell phone industry. I get my iPhones for
Yeah,
free,
when you
man.
when you when you say I get a hand me down, it means I get a brand new iPhone. Is
Usually
what
the second one. I don't usually get the
yeah.
brand new one, but
So
I'll
my wife
probably,
gets a brand new one.
yeah, yeah, that is true.
Yeah.
But my wife has always had preferential treatment. She deserves it as well. The thing about it is, $1,200 phone obviously is exorbitant. There's no
Tim,
doubt about it.
but
But
here's
can
the
you
truth.
tell me that it's not a better phone? Because I
No,
think
the
Apple
iPhone
does
is
make the
not.
better product.
I don't believe that, and I use Apple products. Apple technology is years dated against some of their major competitors. They refurbish old technology simply because they're the number one marketing company in the world. So
Mm.
you can sit there and be the Apple lover all you want, but you can't convince me that they have a better quality product, and that better quality product has to justify a price range that is 20 to 30% above other competitors. No way.
Agree to disagree. I'm going to get pulled into an iPhone debate with you today. Let's move on to the NASDAQ. We're talking tech as it is, obviously. FANG stocks, Amazon, the most traded company by actual value here today. When you multiply the share price against the volume, very, very active. NQ dropped, and it looked like it was going to get crushed here this morning. We are down. We are nowhere out of the woods here from a midday perspective, Matt. We're down 1.3% right now, trying to recover a little bit here. What's your read on tech?
My read on tech is if it doesn't, and it does have this intraday price movement you're seeing in the market is impressive from the bull side. Okay.
Mm-hmm.
You had a snapback rally after that initial sell off that you had overnight.
Mm-hmm.
So here's the cash open right here, Tim. You have initial snapback rally coming into the cash open. A lot of this price movement happened overnight. So here's the market close yesterday, right? Here's the market close yesterday. Here's most of the market activity coming in on the overnight, because once those Asian markets open up, the Shanghai index down 2%, the European market's down, that kind of carries over into the US market. You saw that carry over, but the cash open in the market has been fairly positive so far, but you're still kind of stuck in that high base here, Tim. If you see this price appreciation, and I do think this is very, very important, I'll tell you why here in a second. If you get back up above 6,600 and break out of that intraday resistance at 66.15, you should see rapid price appreciation coming back, and you could recover the losses today, Tim. Okay.
Mm-hmm.
On the flip side, if you close under 6,600, technically speaking, look what this is doing. You're breaking out of a major support level right here, Tim. Okay, at 6,600. There's also evidence over here back at the first of the year that 6,600 acted as a support level, but you're breaking down that. Now, I want to paint a picture for you, and I've done this before. Most consumers aren't aware of what's happening in the market over the last couple of days. Would you agree with that?
Correct. Yep.
They haven't checked their 401k balances, correct?
Mm-hmm.
Okay, but they are going to read the headlines tonight, right? They're going to watch the nightly news. They're going to go on CNN. They're going to go on Fox News. And what's the headlines going to be? The headlines are going to be this: market has erased all 2018 gains, right?
I don't know. Listen, I know it would be easy to go after 401kers and ignorance. I don't know many people that don't
No.
already
That's not
know.
my point, Tim.
Yeah.
That's not my point. My point is, are they going to capitulate to that fear?
I don't know. They tend to not until there's real pain. Do you think they have real pain when they've given up their gains, right? You take the massive amount.
I think headlines can drive fear. Yes,
It sure can. Absolutely. There's no doubt about it. I know that too. And obviously people are afraid out there. I mean, the temperament I get from people is they're trying to ignore it for right now. That's what most consumers do. And that's why they get hurt by bear markets, right? Is that they just ignore the problem. They don't get in there and wrap their head around it. Will the current volatility be enough to get them focused? I don't know.
Those are some nasty headlines to come across.
Yeah.
And a lot of those people have recovered from the 08 crisis, Tim, and they don't want to repeat it.
Sure.
So are they going to be quicker to go to a cash position simply to secure what they've covered?
Mm-hmm.
I don't know. I mean, I'm just saying that could lead to some more bearish sentiment. That's all I'm saying.
Some of the stocks that are getting beaten up by the bearishness here today, JD.com, Ross Stores, give me ROST. We've had this one on the option report many times recently, and it's down again very, very big. Breaking down a lot of these retail names, Matt, they're just getting beat up as we go. Yeah, on that target earnings and whatnot.
Ross
they had earnings themselves. Yeah,
Ross Stores earnings too. So I mean, they came in as a slight. All these companies, LB Brands, Ross Stores, Target, they all missed on earnings per share.
Mm-hmm. Yeah, the retail sector is under pressure and obviously getting beaten up here. Speaking of that, it makes me think, give me a look at Walmart. I know we were bullish on Walmart there for a
It's
while.
getting beat up too.
Same thing. I mean, when the whole sector is moving, it does not matter if we liked where it was. It's now broken down below that.
Tim, I was looking for a trade right here, right? If we slowed down, upward movement in price, that was going to be an easy trade. I was looking for a trade right here. Slow it down, upward movement in price, that's an easy trade. You know, coming out of obviously the post earnings. I was even yesterday, I was looking at a potential trade. If you can get, slow it down, get back up above the high of yesterday, that would have been a trade for me. But at no point in this retracement, even post earnings, have you had any confirmation of a trade. And so it pays to be patient, Tim. It pays to wait for confirmation.
Yeah, I would agree with that. I mean, it pays to be patient at all times. You should not be over, trading anything in one direction or the other, get confirmation, get a trigger, and then build your delta trade on Tuesday. Yeah.
I don't think there's any trade on Walmart coming into perhaps weeks.
Yeah, for sure. I mean, I think that you've kind of gone into a neutral zone from a delta perspective. And you got to remember, guys, we have Black Friday sales, which can create volatility in retail. You have Cyber Monday numbers. We're moving into another week of volatility in retail where it could either shoot right back up or continue to sell off. Right now, retail is under a lot of pressure. Target, Walmart, a lot of these names, Matt, obviously selling off. Move on to RTY if you would, and give me the small cap index and kind of talk about this one. I've been saying, 1500 was a key level there last week. It's now broke down. Now we've got other levels we're pressing here. It's still bearish. I mean, everything's bearish right now in this market. Obviously, we're pressing on some support. Have we broke support here? And if
I think you have broken a certain degree of support. Yes, I do believe that this was a symmetrical triangle that was broken. The problem with breaking out of symmetrical triangles is you still have your horizontal support right here that you have to contend with. So if you're looking at that as a potential, I'm thinking 1460 would be the potential next trigger. You break 1460, you got smooth sailing to the downside.
Mm-hmm. Yeah. I'm looking at the small caps and kind of thinking about the big picture there. There's not a lot of support underneath that for another 60 points, maybe 1400.
Well, 1450 can act as a slight support level. It did in February, but I would say 1400.
Yeah. Interesting. Let's go on to currencies and commodities.
One of the things you have to understand for the traders out there is the indexes love whole numbers. Mm-hmm. They do. Indexes love whole numbers more than, say, even an individual stock does. Right? Mm-hmm. Indexes do. So, you break 1460, perhaps 1450. Yeah, I would say 1400 is the next target there.
Let's look at the dollar here next, Matt. I'm looking at the currency markets as we speak, and you've got a lot of volatility in currencies here today. The Aussie, many of the different ones. Dollar rallying is going to put weakness in the other ones, across the board pretty much. Pullback pivot. It's a beautiful candle here. A lot of long dollar trades are going to be in play. Which one's your favorite?
The one I wrote about in the Forex report, the dollar CAD.
Yeah.
I mean, it was the trade of the week in the Forex report. So if you're looking at the dollar CAD pair here, that was the one I felt most comfortable with, Tim. And Cody's funny. So Cody, come on in here real quick. Explain what you did on this trade, because you picked it up off the report, correct?
I did. I did. So I set up a go to bed trade, just like we've talked about, and where you said the take profit should be just to the top of where it was. I literally woke up and had already been triggered into the trade and taken profit before I could even do anything to adjust it. I was like, oh, hey, I made some money this morning.
He triggered out before he even woke up. You gotta love trading currency. But it was my favorite trade of the week. It's still my favorite trade. It's certainly at a profit-taking moment. But you got to love this strength coming into the potential breakout here, Tim. At a minimum, if you were in a trade such as this, I would adjust that stop loss, obviously. Looking at the 5-minute chart, you can kind of see intraday support levels. You could adjust that stop loss. But Tim, you're even breaking out intraday after a price movement like this. So it's been very impressive so far on the dollar versus the CAD. That's the one that was the trade of the week in the Forex report. Another trade I was looking at potentially was the dollar versus the yen. It has not triggered for me yet, Tim, and it's got to get back up above these levels here. I'd say 113. It's got to get back up above for a potential potential trigger to happen. But that's one to keep an eye on. You're still kind of hovering this support level against the yen. Now, obviously, I do have bias against the yen. I think it's the most trash currency of the trash paper currencies. But the thing I wrote about on Saturday in the Forex report, Tim, is you can't discount this volatility here. You can't discount that. You can say it's sitting at this support channel, but you got to wait for strong confirmation on that one. And so you're looking at that. For me, it's got to get back up above that 113 level. When you're looking at the strength, and the one I'm looking at right now is the New Zealand dollar. I love what the New Zealand dollar is doing over the course of the last month or so, and you're getting the pullback you need to re-trigger, Tim. Okay, so basically you hit the 200-day moving average. It's pulling back into the breakout zone. Wait for a little slowing momentum, but I'm looking at this maybe not today or tomorrow, but I'm looking at this coming into later this week. And so we'll look at it again tomorrow, but it's got to slow down here. But that's something to keep an eye on as well. The Australian dollar broke out, and now it's kind of coming back down with the New Zealand dollar. So kind of staying away from that one right now, just given the fact that it kind of gave me a failed breakout similar to what the euro did last week. But that CAD dollar, I'm still looking at the yen, and I'm looking at the New Zealand dollar for later this week.
Let's look at the euro dollar for 1 second. I want to get your take on that Spanish news that I saw overnight, that they would vote against any Brexit deal if it was not amended in their favor and this and that. Obviously, the euro dollar from a technical perspective, Matt, has a pretty much a perfect pivot trigger here. You could put that in a textbook almost. You're into the falling 50-20 zone.
I get what you're saying here, but yeah. I don't think you can put it there, because for every time we've seen positive or negative news, 2 days later, what do we see?
I get it.
The opposite. And again, we talked about this last week when the failed euro breakout trade. Once again, thank you, Theresa May, for lying to all of us. Okay, but in terms of this, fool me once, fool me twice. I'm out on the euro dollar. And even Cody asked me what my opinion was of the pound, and I was still short a breakdown on the pound. But on these two currencies, if you're going to trade these two currencies, the pound or the euro, you better be prepared for randomness in terms of their price movement, because it's not like negative news begets negative news over the course of the last month and a half on this, Tim, and really over the course of since June of 16 when Brexit originally happened. It's will they or won't they? Will they or won't they? Will they? Yes, we will. Won't they? No, they won't. And that's what we're dealing with on these two currencies. To me, until we see some clarity on those geopolitical situations with the Scottish border situation, with the language of the Brexit deal agreed upon, and Parliament passing that agreement, Tim, I'm going to stay away from these currencies until they're more technically sound.
Give me FXE if you would. Let me pitch an idea and throw it out there, and you tell me. FXE, is that one the euro? Yep. Okay, so these currency ETFs, they got a little gapping in them. Don't be intimidated by that, new traders. Try to understand it. That's just a 24-hour-a-day market. It's very liquid. The options are liquid. They've got weeklies. They've got penny options. They've got all kinds of open interest and volume in there. We're talking Delta Tuesday. Let's say that I respect what you just said, and I always do, by the way. And I want to kind of control the risk against a Forex Delta-based directional trade. What about a put option where you can reduce your costs, still have the leverage, and then a bunch of time in play? See, part of the concern is the short term. That's what I'm saying. Short-term volatility, the news can whipsaw this trade because so much is going on with the Spanish debt and all the stuff with Brexit and all that kind of thing. I get it. But it's in a downtrend, Matt. I mean, that is very bearish.
Well, let me answer like this. It is much easier to carry through short-term movements in the stock and options market than it is the currency market. Mm-hmm. Right? Would you agree with that?
Well, position trading, by the way, for a lot of traders, is just a better way to trade. So what we're talking about is changing time frame expectation, And in Delta, by the way, that's very important because it can dictate how you trade. If you're short a Forex pair, you're pretty much swing trading. Now, you can position trade it.
Day or swing trading.
Day or swing, right?
Well, you can do more than that, Tim. I mean, you can position trade or invest in the currency market, but for a lot of retail traders, they just don't, right?
Correct.
Because they just don't. They shorten their time frames. Give me 1 second. Mm-hmm.
So as I'm looking at FXC here and you're bringing your headset back on, one of the reasons I brought this up is that I understand the short-term news volatility can throw a wrench in your planning.
Well, that's my point, Tim, is that if your analysis is I want to short the euro for the next 6 months because I simply do not believe that these politicians are going to, come to an agreement with Brexit. Tim, I still think there's many in England in Parliament that don't want Brexit to happen. I still believe that that there's still a belief system in England on a certain percentage of individuals who simply do not want to leave the Eurozone, and it's delay tactics. And we know what delay tactics are. Delay, 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 delay. So let's say we go down that rabbit hole for a second and we say, okay, 6 months from now, I want to short the euro because I simply do not believe that they are going to come to a common ground solution that benefits both parties involved, being the Eurozone and obviously the UK. And if they don't find an agreement, Tim, that's going to have some random volatility and all that jazz. You can certainly go out a little bit longer in time frame, hold 4, 5, 6, 7, 8 months in the options market by buying a put option or by shorting the actual shares of the stock than you can in the currency market. There's no doubt about that.
Yeah, year to date, the euro's down 5% against the dollar. I would expect that to continue over time. Cody, you were coming in. I know you tried a lot of Forex lately. What's your thought, young man?
Actually, I agree with all that. And I've been watching the Brexit deal probably a little closer. And actually, one of the things that Matt was saying, where there's a large portion of people who don't want to leave yet, and it's kind of going back and forth. A lot of the politicians don't even want to happen. So even though the constituents in the votes said like, hey, we want to go, if you read through what this newest deal looks like, they're not leaving, they're just leaving.
Yeah.
And it's pretty much it's just renaming the same deal.
We're going to get divorced, but we're still going to live together
and share a budget and help each other out. And
yeah.
So there's and that's one of the there's so much going on with it right now.
I personally would stay away from that trade, Tim, personally, because I see too many variables impacting that. When you're looking at it from a longer term perspective, if your analysis is strong dollar, short euro, I understand that. But for me, I don't know. I've seen too much whipsaw in the short term. I've seen too much lack of consistency in the short term.
Well, and here's the thing. I mean, you could make the argument, might as well just go with the dollar CAD because it's a clear path to victory and you don't have all that complexity. So there are many different currencies that we can focus on. If you guys have not seen the Forex report from the past weekend, go and watch it. It's still only Tuesday. A lot of value in that report. You did a great job with that, Matt. Let's move on to the commodity market if we can. Crude oil obviously getting crushed again. We've talked about the bearishness. I've talked about it many, many times. Every day it rallied last week. I talked about the fact that we are not done with this. You confirm that. We see this thing absolutely getting slaughtered. Matt, outside of just moving into a bear market and price action and movement, technically it's just down. I don't know exactly where the bottom is here. How do you read this?
Number one, it's extremely bearish. It's been extremely bearish for the past, really kind of I'd say the last 2.5 weeks, right? Ever since you had the technical break when it couldn't hold the 200-day moving average, you've had this very consistent trend line. We talked about it yesterday. It hit its head on it yesterday, got absolutely smacked right back down. The thing about it is today, though, you're breaking $55, and you're breaking $55 on strong volume. You're breaking $55, which is a short-term support level. It's a long-term support level, and the most likely destination, Tim, for this is $50. That's the most likely destination. Now, will that be a longer term bottom? We're not ready to analyze that yet. Let's see it hit $50 first. However, this is going to continue. This is a short opportunity right now.
Yeah. When the market starts going down, commodities can also go down. This is actually a very, very bad sign historically for the economy at large. Matt, we've been talking about a global recession and the U.S. has kind of avoided it and crude oil had kind of avoided it. We are now at the 1-year low. I don't know where the bottom is. You don't either. Nobody does, but you have to respect that.
I just can't wait. I can't wait for people on social media and people that are not financially educated being like, oh man, but it's so good. We're only paying $2 for gas. And, you know, I got extra $50 every single month in my pocket that I can go spend. And it's like, you don't understand how important oil is to the economy and how important oil is to your job, even if you don't work in that industry.
Mm-hmm. You know, and there is some of this, you know, one thing is confirming the other. When stock prices fall, it makes people think about recessions. And when you think about recessions, commodities come down. You move into safe havens like the dollar. We're not seeing the move into gold like we have historically. We'll get to metals here in a minute. But energy is going to be interesting. It's also affecting the energy sector. Exxon down 2%, Chevron down 2%. A lot of the major names, ConocoPhillips, PXD, EOG, DVN, down big, down heavy, and they are under pressure. XLE and XLB, obviously under some weakness here. Natural gas, heating oil, the other energies. Let's talk NG for a minute, Matt. Finally coming down a little bit, down 7%, back to 4.35, you know, and kind of trading between that 4 and 5 zone on NG. You got to read on XLE while you have it. Sorry.
I was just looking at a potential breakdown at 65. Keep your eye on that.
Oh, I think there's a lot. There's a lot more opportunity in energy stocks than there might even be in commodities if you don't feel comfortable trading crude right now. There's a lot of stocks that you can play breakdowns on for sure, and materials as well.
Mm-hmm. Yeah, materials was trying to form a bullish retrace from off a short-term pivot back down, got blown out of the water. There's no trade there now. You were looking at natural gas, correct?
Yeah, NG. This one has been the story of the last couple of weeks. Many of them, actually. There's a lot of big stuff going on across the board in the market, but obviously you're going to get extreme price movement after you had that breakout parabolic uptrend that we had. That's just a fancy way to say it took the whole top out of the market right there on natural gas. We went all the way to 5.
Way of saying that's completely crazy price movement. You should stay away.
It is crazy price movement. There's no predictability on a day-by-day movement. Okay. I don't have anything on NG. I haven't had it for days. I have been bullish on natural gas for some time. UNG, if you own the ETF long-term, something like that, I can understand it, but you probably want to lock in some of that with a hedge or whatever it might be.
Yeah, I mean, if you own a UNG, the best way to approach that, Tim, is to go get yourself a good little $2.73 credit divided by 34. Tim, right now you can sell a 40 delta deep out of the money, and I mean deep out of the money. Look how many strike prices are here, Tim. You can sell a 31-day call option, cash flow $276, actually $275 now. You're offsetting 7.8% risk right there. You're cash flowing 7.8% on a covered call on UNG. So for me, if you own UNG, okay, and this is something we've done in covered calls with UNG in the past, but if you own UNG, the best way to approach protecting the gains that you've had over the course of the last week, 2 weeks, just write a covered call right now. How often do you get 7.8% on a covered call on a stock that's going up?
Mm-hmm. Yeah, I agree with that. It's a good play. I mean, whenever you get upward price action, selling a call against it is a way to capture credit and do a cash flow. Love it for IRA accounts as well. One of the most important ones.
Well, think about it, Tim. Yeah, and I want to just convince you of something. Let's say you're not in it. Okay.
Okay.
You could buy it right now for $34.74. Write the $40 call option, which is 5 points out of the money, Tim. 5 points out of the money, which is about 12% out of the money. And if UNG goes up past $40 over the next 30 days, you are going to cash flow a grand total of around 19.5%. Okay.
Okay.
19.5%. Now, the risk is obviously if UNG goes down, right? Okay. So if UNG goes down by $2.73 or 74 cents now, you're still going to break even on that short-term trade. You'll buy back the option, resell another one. Buy back the option, resell another one. Can I convince you to do covered calls on UNG right now?
First of all, you put me on guard because you said, let me try to convince you of something. So the answer is, listen, I'm a man from the country. All right. When you tell me you're going to try to convince me.
Ken, come on now.
Oh, yeah. You know, of course, it makes sense.
I'm just saying it's you might want to wait for the volatility to subside, but you're also not going to get 7.8%. But Tim, that is a massive credit on a covered call with massive upside potential.
Well, and by the way, hopefully those credits will stay for some time. They're going to be higher than they are once it settles in. But we saw such low credits on UNG for a long time, Matt. It's finally nice to see.
Oh my God, Tim! UNG was one of the original ETFs in personal gold, right? It was USO, SLV, UNG, and United States Steel. That was the 4 tradable instruments that I originally started doing personal gold on. I had to remove SLV about 5 months into the process because volatility had subsided so much that you couldn't even do covered calls on it, right? And then it became USO, UNG, US Steel. And then I had to remove UNG from the equation because you weren't getting any credits on it. And then they did the reverse split just about, when was it? About 6, 7, 8 months ago. I can't remember. They did the reverse split. And now that you're starting to see a little bit more price volatility here, you can start getting credits on it again.
Let's move on to gold here. Last one in our overall index, and then we're going to go through a couple of Delta plays here on Delta Tuesday. And by the way, welcome out, Halftime Crew. It's always good to see you guys. If you're here, you're watching the show, and you enjoy it, give us a thumbs up. That always helps us get the word out here on YouTube. Matt, gold, interesting. Dollar doing what it's doing. You would have expected more weakness out of gold. I kind of like the price action from that perspective, but I hate the chart if you're bullish because it's right in the middle of 2 ranges. It's flat neutral to me. You might be able to paint a bearish argument. I don't buy it, but I see more of a neutral range-bound chart. What's your read?
Neutral. I mean, you can paint a bearish argument in the short term, but I can also paint a bullish argument. You're back up above 1220, which was a important resistance level for it as well. You are forming a little bit of short-term bearish retracement, but I think at the end of the day, when you can make an equally credible argument for both bull and bear, you got to go neutral. To me, there's no trade here until it breaks 1240.
I agree with that. I think you've got a fairly priced market in the short term until you get clarity on what's going on with the dollar, because if the dollar does go into some huge uptrend, gold is going to have a hard time rallying and breaking out, Matt. That's just a reality of the way that those things work. Yep. Well, we are at that point, guys, going into the fourth quarter. And by the way, it's not like Rams Chiefs last night. I got to tell you, we're not putting up 55. Okay.
Whoa. That was an awesome game.
That was incredible. I mean, I think I read it was the 3rd highest point total of all time. The only time that 2 teams had ever scored more than 50 points in the same NFL game. And I didn't get to watch it, Matt.
Well, I did. I did. You were happy with me. No, Tim and I were in a meeting last night and we were doing some data collection, and basically I was watching the game and I was like, Tim, are you watching this game? He's like, no, I got to record. I'm going to wake up tomorrow and watch it. And I said something sarcastic, and he's like, fine. And he checked the score right then. But no, Tim, I'll tell you, that game last night reminded me of an old school whack college football game.
Oh, yeah.
Okay? And might be some of the halftime crew who knows what I'm talking about. Old school San Diego State, BYU, 58-52, going into the fourth quarter. It was unreal. It was a great game by 2 great teams.
It was pretty incredible. I did get to see, because I went out and when you were telling me the score and I checked it, I went and pushed pause on the TV so I could watch the last 3 minutes. And even those last 3 minutes, Matt, were just incredible. A couple of great teams. And I think that they're like now NFL darlings. Everybody wants the Chiefs and the Rams to do well. They're very, very likable. There's no doubt about it.
I like them both.
Don't sleep on my Bears there, guys. I'll tell you. Looking pretty decent as well. Matt, Tuesdays in our halftime report, we want to talk about Delta. Now, Delta for us, when we say that, it's a big field, a big philosophy, an entire field of thinking about directional trading. There's a lot of companies setting up for Delta here today. Puts, calls. We could do something directional with Forex. Kind of set the conversation up, and let's pick a couple of stocks and kind of break down a few ideas, okay?
Oh, we're just going to basically prep a couple trades.
Yep.
That's what we do. I mean, Delta stands for direction. Usually we're either buying a stock or buying call options, or we're shorting the stock or buying put options, right? Mm-hmm. There's other different strategies for more advanced option traders, like bull put spread. It's for credit spreads, but that's more theta. Bull call spreads for advanced option traders, and bear put spreads. But I think, Tim, let's just buy a call and let's just buy a put today and show them the simplicity of it.
I like AMAT, Applied Materials, on the reversal pattern. I think is a good one. McDonald's as well. If you're looking for a conservative call play, We talked about McDonald's. I mean, there is no such thing as a recession-proof company, but that company is still holding a very, very strong uptrend. CBOE from 2 weeks ago's options report, I'm still bullish on. Let's pick one of these. Let's do AMAT. Let's kind of walk through a delta play on AMAT.
Okay. AMAT's a little different given the fact that it has not confirmed yet, right? We already talked about AMAT potentially breaking out of that 36 handle. It obviously has not done that yet. So this would be more of a trade where based on your breaking out, right? And this just isn't breaking out. Let's look at a couple others out here too, Tim. ADI, potential breakout of $90, but it's got to break out of that. AIV. Okay, AIV. Now, what's your take on this one? Obviously, bullish retracement coming down into the breakout channel. Now it's approaching the breakout here. Little overextended, but keep an eye on AIV. Tim, I'm going to do something crazy, though. I'm making an argument.
Stop.
I'm doing it. I'm doing it. It's happening. No, this is not confirmed yet either, okay? But I will tell you that this on CMG, and this might be, blasphemous for me to say, this is setting up as a pretty decent little bullish retracement if it can trigger above 470, Tim. Okay, so that's something you need to you might want to look at. But the problem with triggering into a bull trade, Tim, is nothing's confirming today. So looking at, say, McDonald's here, McDonald's isn't confirming. When you're looking at Merck, another one that I like right now. Merck coming a little bit back down to the breakout channel. Tim, what do you think of Merck?
No. See, bullish, you would have to set up a contingent trigger. So I like AMAT, you can set up a contingent trigger.
That's the problem with all of these is you got to set up a contingent trigger, right?
Yeah, I'll give you a couple rapid fire bearish then, and go with the market and make it simple. AMEMAT, I'll give you an example. Several that are triggering down. Diamond Offshore also going down.
Diamond Offshore. That's Diamond Offshore breaking down right now. That's a good one.
Look at AME. You can pick one here as we go.
AME breaking down.
Caterpillar.
Breaking down.
Cummins is really close to triggering down. I was looking at this with one of my students this morning.
I'd say that's got to break 140 on Cummins.
Need a trigger. Deere's already, we've missed it. I think you haven't
missed.
You haven't necessarily missed CAT. With oil weakness, energy sector would be good. Eaton Corp, which is industrials as well, still waiting on a trigger. ETN.
Yeah, that's waiting on a trigger underneath these levels.
FLR.
That one's triggering right there on the breakdown. So you got DO and you got Fluor Corporation. Both
General Dynamics. It's one of my favorite stocks I'm in right now. It was on the option report 2 weeks ago.
I like that trigger here today. I know it's kind of doji in here today, but you got to like the rolling over impact here. You could pick any one of these. I mean, DO, Fluor, General Dynamics, whichever one you really want. But when you're buying put options, guys, in a swing trade environment, basically when you buy a put option, for those of you who are new, it is a contract that gives you the right but not the obligation to sell the stock at a set price on and before a set date. Now, that contract language can be a little confusing, but the simple reality is you're never going to exercise your right to sell the stock at a set price on and before a set date. The reason we buy put options is twofold. Number one, it is to protect long-term investments in situations that are going on right now. Would you agree, Tim?
Yeah.
Okay. And number two, it's simply for traders to make money in short-term trading, such as buying a put option because we think, Diamond Offshore, Fluor, or GD is going to continue to go down. So what we're going to do is simply because JD is confirming here, Tim, we're going to prep this trade. Right. Okay. This is the directional put option trade. Now, whenever you do directional options, guys, you're always looking at assessing where you're going to enter, where you're going to put a stop loss, and where you're going to put a target order. Okay, kind of like what Cody was talking on the U.S. dollar CAD trade. Hit his target, he got out. So in terms of this, I'm just going to buy a put option right now. The market's open, Tim. I know the price action is going on. I know it's confirmed. I know it's already confirmed to trigger by breaking down underneath that 20-day moving average. If you wanted to set a contingent order to only break if it goes down underneath the low, which is about 175, that would be a higher probability, but I'm not going to do that. We've done that in other halftime reports. So I'm just simply going to buy a put option. But before I go buy a put option, I got to assess where I'm going to put a stop loss and where I'm going to put a target. Now, Tim, my initial target is always on this pattern. okay, on a pattern such as a bearish retracement, my initial target is always the previous level of support, okay? On something like Diamond Offshore, which is breaking down out of a support channel, there's different ways to go about targeting, from a significant hold number, extended trend lines, looking at historical support and resistance zones, and so on and so forth. But with JD or GD, General Dynamic, we're in a retracement. I'm going to target that 165 level. Secondary target, Tim, would be probably into the 160 level, but I would have to go do a little more deep dive. I'm just going to put a target 165. Stop loss placement, Tim. Now, if you bought this put option on last week's option report on this confirmation here, okay, this is why triggering is so important. You could easily place a stop loss above that level of resistance at 186 in a what if I'm wrong, and that breaks right through that level, okay? But now, Tim, by waiting a week on the confirmation, which is fine, okay, which is fine, still a good trade, you can't put your stop loss all the way above 186 because you would be taking way too much risk for the potential reward. So you have to look at different types of stop losses. And I want everybody to write this down, guys, okay? When I can't place a stop loss above this level of resistance, the one I want to because of reward to risk ratio factors, there are other techniques. Technique number one, a stop loss 10% of the ATR above the high of the day. So if the high of the day, Tim, is 177.49 and the ATR is 416, 10% of that ATR is about 41 cents. 41 cents above the high puts us smack dab at 177.90. So I'm going to put a stop loss at 177.90. That's one way to put a stop loss. Another way to put a stop loss, Tim, is you take 1.1 times the ATR above your entry price, okay? And that's a really good trailing swing trader stop loss as well. So once again, if the ATR is $4.10, we take that and we times it by 1.1. And the reason we times it by 1.1 is we want to get it outside of one ATR stop loss range. Okay, that's what we're trying to do. Get it outside that standard deviation from a stop loss. That stop loss goes at 451. That would put us above our entry price. And our entry price, we're just going to do current market price, 175.90 plus the $4.51, which is 1.1 times the ATR. And that puts my stop loss at 180.41. So there's two techniques you can do to put a stop loss when you're buying a put option in this type of situation. Option number one, you put a stop loss 10% of the ATR above the high of the day. The high of the day is a day trader's type stop loss trigger, so on and so forth. The second way to do it, which is more conservative, especially given that the stock has a very small price range today. The second way to do it, if you want to be more conservative, is you put a stop loss 1.1 times the ATR above the entry, and that would put your stop loss at 180.41. Either one, the conservative or the aggressive stop loss, is perfectly fine here. The second thing, we already know we're targeting, all right? So now we come to the trade tab, okay? We come to the trade tab. And I say, okay, left-hand side is call options, right-hand side is put options. The first thing I need to select is obviously time frame. Now, Tim, I'm going to go out to 87 days, okay? I know I'm going to go to 87 days because I highly doubt I'll be in this trade longer than 7 days. Highly doubt it, okay? In these markets, swing trades, Tim, they're 3-4 day trades, right? So I'm in this trade literally just a few days. Number two, but I'm still going to buy 87 days of time simply because as a buyer of options, we don't want to touch these short-term options because of theta concerns, right? Especially coming over a extended holiday weekend where Thursday the market's not even open. Friday, we typically don't see a lot of price movement on Friday. And then obviously Saturday and Sunday, the market's not open. So over the 4-day holiday weekend, the market's only open a couple hours, which means theta is going to eat it all the way up into Monday. So I want to be more conservative with the time frame when I'm buying options. Left-hand side's calls, right-hand side's puts. Now, Tim, the next thing I have to determine is what strike price do I want to select. Now, my personal rule is I typically buy at the money options is what I typically do, somewhere around 0.50. But for a lot of new traders, I would recommend something more conservative, right around 0.60. Tim, there's sometimes I will buy options with 0.40 deltas, 0.30 deltas, depending on liquidity and bid-ask spreads and, you know, different concerns. But that's for more advanced traders who can assess those types of things. For new traders, stick to a rule somewhere around 0.60 on the delta. You can see the delta column right here. We're going to go down to that. And yes, Tim, I'm going to right click because that's what real traders do. I'm going to right click and I'm going to go down to buy single, and that way I can buy a single contract. However, if I want to buy custom and also place my stop loss order, right, I can put this into the mid price at 1060, change that till good till canceled. Okay, stop. And if you click on this little wheelhouse here, let's sell if the market goes at or above, and let's just use the more conservative stop loss at 180.41. And if you read the orders down here in the description, save it, and then you can confirm and send. That's simple.
You know, the reality is that 180 is the right contract. Out of the looking at the option chain, if I was going to choose between 180, 175, and 170, I might even go all the way out of the money to 170. But I like delta rules for new traders. There's no doubt about it. Wonderful job there, Matt. Appreciate you walking everybody through that. You know, and I love what Coach Frank said here in the chat. You can think of long call and long put kind of as a replacement for the stock, you know, which is it's a good way to think about it. Instead of shorting stock, you buy a put option. Instead of buying stock, you buy a call option. Options give you leverage, they give you control, they give you creativity, and they allow you to trade, you know, a lot of different ways. And a straight delta play is a simple way to play it. There's no doubt about it.
Sometimes we can get very advanced with our analysis, but the reality is simple is usually better. Sometimes just going out there and buying a call if you expect price to go up and buying a put if you expect price to go down. It's a wise move.
I agree. All right, guys, that is our halftime report here for today, 11/20/2018. Cody, great job. Matt, you and I, we got a bunch of stuff to do today, so we're going to wrap this one right now. A lot of great things going on over there at Tackle Trading. By the way, if you love Tackle Trading, let us know in the chat. I know that is a shameless request for
shameless plug.
Show me some love kind of thing. But I love doing it, and it's great to hear. Hopefully we're making an impact. I believe that we are. I know that we are actually. I hear your messages. I get your communication one-on-one, guys. If you need anything, get in the clubhouse. Post in there. You know, get active over there on the website. Go and get that pro membership so that you can get those reports and really learn how the coaches pick different candidates. Cody, great job today. Matt, great job today. Any last thoughts there, Matt?
Nope. See you guys tomorrow.
Take us out. See ya.